can see that it reached really unprecedented levels there in 2008 and 2009, driven by the very high caustic soda prices that we saw. In fact, caustic soda prices at the end of 2008 and going into 2009 were as high as $1,000 a ton. But that situation quickly collapsed. The fact is that caustic soda prices went from $1,000 a ton at the beginning of 2009 to a point where producers were basically giving it away at the end of last year. So that market completely collapsed. Now, what does this mean for the integrated producers? Well, in 2008 and early 2009, if you were an integrated producer and your PVC business was suffering or challenged, you may not have been as concerned about it because the chlor-alkali side of your business, particularly the caustic soda, was really carrying your business. You were making such good margins on that piece of the business that if your PVC business wasn't doing so well, you may not be crazy about that, but your overall return was so good that you weren't all that worried about it. Well, that situation has changed. If you look at the ECU cash margin red line, you can see that it's much lower today. It's down to traditional levels, and it's certainly not at a level that we believe can carry the entire chlor-alkali and vinyl chain. So this chart really shows you the distribution of margins between the entire chain, from ethylene to the ECU piece and PVC. Now I want to pay particular attention here to the PVC margin. Now this is on our view of assets shared. This is the integrated producer that we're talking about. The PVC margin, or lack of margin, which is really more the case here, is represented by the red piece of the bar. And you can see at the end of 2009 and really at the beginning of 2010, those margins were significantly negative. But again, they were offset most recently by very strong ethylene margins, whereas previously the ECU margin that we've been talking about, that dark gray section, was carrying the day. Everything is now moderating. We see that PVC margins are expected to return to positive territory with some of these price increases that have occurred here in the first quarter and are still on the books technically here for April. So we think that by the time we get here into the second quarter, we're going to see a return to positive margins for the PVC producers. Now, I think that they'll be challenged to retain these positive margins when ethylene prices start coming back down. We know that the pipe makers and other resin buyers that are out there are going to be anxious to see some sort of response if ethylene prices come down. But I can tell you that they can't come down too much, because if you look at that overall chain there's just not that much margin in the chain with ethylene coming down, the chlor-alkali piece being moderated, and PVC being modest at best. So with all of that in mind, this is our forecast for PVC resin prices. This is on a regional basis globally. What we're saying here is that regardless of the region considered, we believe that PVC resin prices will be trending higher through the next 2 to 3 years. Now, yes, we know that there'll be some noise in the system. As I said, we've seen a big run-up in the first quarter. There'll probably be a little bit of an adjustment here in the second and third quarter. But on average, prices are expected to trend up. Now, why is this? All right, we didn't really get a chance to talk about energy prices due to time constraints here, but our view is that energy prices will be trending up, keeping pressure on cash costs from a producer standpoint. So production costs are going to be going up. At the same time, we talked about the margin situation. The PVC producers are going to be looking for PVC to carry more and more of the margin share. It won't be supported by the chlor-alkali piece or ethylene in the way it has been recently. And thirdly, we expect demand to improve. So when you combine all of those things, we say on a global basis, we think PVC prices are going to be trending up. Now, in terms of demand has got nowhere to go but up. This chart represents what's happened to PVC demand over the course of the last 5 years. This is year-over-year demand changes for PVC resin sales in the U.S. and Canada. And what I've done here is segment or separate the major end-use sales or applications for PVC resin with pipe and fittings at the top. Again, it's the major applications application for PVC resin, and really globally. In the U.S. and Canada, it's well over 50% of the total. Now, what you'll notice here, if you look at the yellow numbers at the bottom, is from a domestic standpoint in the U.S. and Canada, PVC resin demand on a year-over-year basis has lost ground in each of the last 5 years. And it really started getting ugly in 2007, when the market lost 7% versus the previous year. 2008, the first year of the recession, was a disaster when the market lost 16%. Now look at what happened to the pipe and fittings market. Now, you guys are very closely attuned to that. That particular segment, again, the single largest market for PVC, lost 21% following 2007, and another 5.5% last year. Overall, the pipe market, pipe and fittings market, lost 7% on an average annual, we can call it growth rate basis, during the last 5 years. 7.8% for the entire industry. Big reason for that is PVC's dependence on the construction industry. Virtually every major end-use application for PVC is tied in a big way to construction. And here you can see what's happened to the construction industry in the U.S. This is spending in the U.S. Going back to 1995. The red line represents private residential spending, housing, basically. And you can see that it peaked in 2006. And you can see that it's been on a steady decline ever since then. But we think that that situation is poised to recover. Part of it is the recovery in GDP that we've been expecting and forecasting. And this shows you if you look at the 4 red bars there going below the 0 line beginning in 2008 and in 2009, you can see the recession there. The good news is that we believe that the recession is behind us, like most economists, and that we're in for some positive recovery here. We think that the drivers for this recovery, at least prior to what we've heard in the last week, is going to be the banking industry. Exports certainly are expected to be strong, etc. So bottom line, PVC tied to the construction industry, tied to GDP in a big way, and we see improvements in both coming. This is just another view of what's happened with the housing starts in the U.S. You see the peak there that occurred in 2006 when you were over 2 million starts a year. You see the decline that occurred at the end of 2008 when you're around the 500,000 level, neither of which are normal, we would say. The fact is that if you look at a trend line basis here, we really think that about 1.4 million has been the trend. We think that there's a reasonable chance that the industry can get back on that kind of a pace, which will be very good for the PVC industry. And that's the trend line there. So it won't happen this year, but we've already started to see some positive signs in terms of the recovery of the housing market. I want to go through some of those for you here. The fact is that if you look at the figures that just came out for March, home construction actually climbed for the 3rd consecutive month. March housing starts were up 1.6% from February for a 626,000 seasonally adjusted rate. Still well below the 2 million plus that we saw back in 2006, but certainly above the 500,000 rate that we saw below. Now on the downside, we did see a little bit of a decline in single-family housing starts in March, down 0.9%, but that was offset by an 18.8% increase in apartment starts. But the bottom line here for construction on a year-to-date basis is so far we've seen a 20.2% increase versus 2009 year-to-date levels. So some very positive signs in terms of housing starts, the construction industry, and overall economic trends for the U.S. Should be good for this industry. Now, as I said, all of that, we've got no place to go but up. And that's represented here in our forecast for PVC demand for the next 5 years. This is a similar chart that I showed you for the historical demand. This is our forecast for the next 5 years. Again, these are year-over-year changes for PVC demand. Pipe and fittings represented there at the top. What we're saying here